Hey, what's up guys? Kevin Cage here with another crypto update. In today's video, we're going to dive into Casper Network. We've done a lot of videos this year going through some of their partners, the technology, the backers. And in today's video, we're going to cover the virtual machine, along with fully understanding the tokenomics of different projects. For every single project I look at, I want to understand the tokenomics, I want to understand the inflation rate, if any, and how this could affect the price in the future, and then compare it to other assets that we've seen in terms of market cap valuation, circulating supply, etc. So I do this for every single investment that I'm interested in that I'm looking to hold for the long term. I hope you guys enjoy this one, and let's kick it off. Okay, first up, before we dive into the virtual machine or the VM of Casper Network, let's discuss market cap. So we know over the past 5+ years, there have been different alt projects that reach crazy high valuations in terms of market capitalization. We're talking dozens of billions of dollars, and some alts even surpassing 100 billion. So we've seen Cardano reach a $99 billion market cap last cycle, Solana and Doge well above 75 billion, Avalanche or AVAX 32 billion, Litecoin 27 billion, Algorand 15 billion, and HBAR 7 billion. Now it's important to note when ADA went from under 2 cents to over $3 and did over a 160x return with a $99 billion market cap, it doesn't mean there's actually $99 billion liquid available to be sold if everybody sold. There would not be anywhere near $99 billion, it would be a fraction of that. And market cap or market capitalization is just a social construct. It's calculated by the circulating supply or tokens in circulation, even if that is not the max supply, and multiplied by the current price. So for ADA, this 35+ billion multiplied by 25 cents would get you approximately $8.8 billion in market cap. And there was a study years ago by JP Morgan when the crypto asset class was around 300 billion. They estimated there was approximately $50 billion actually liquid in that market, so about 1/6. And you'll notice for these assets that the 24-hour trade volume here is much smaller and a fraction of the overall market cap or the project's valuation. And a more accurate definition of market capitalization and how to calculate it is the circulating supply multiplied by the last traded price. So I said current price, but really it's last traded price. So you take the circulating supply multiplied by the last traded price. So in theory, there could be some investor on another exchange, and let's say they're trying to put in a buy or a limit buy order for Cardano at 25 cents, but they accidentally put it in for $2.50. If there was a seller out there in that order book also with a limit sell order selling their Cardano at $2.50, some of that or all of that order could be filled, meaning the last traded price briefly for Cardano was $2.50, all because one buyer and seller matched in the order book. So if the last traded price was $2.50, that means the market cap would climb approximately 10x or 10 times the price today. Now that's not sustainable, that's just a one-off and prices would likely fall right back down immediately, but that's just an example of how quick market cap can bounce. And the same thing applies if prices are crashing. What if there's a seller that is willing to sell their Cardano at a loss, whether it's a mistake or it's on purpose, just to get liquidity? And they said, I'm so sick of holding crypto, I'm going to sell my ADA at 10 cents just to get out. There would likely be a buyer and even tons of algorithmic trading bots scooping up that deal and buying it at 10 cents. Meaning for that specific trade and for a short period, the last traded price was 10 cents, which actually crashes the market cap. So those are one-off, super weird scenarios, but we have seen that in the crypto space. It doesn't really happen for highly liquid assets and very well-established projects worth billions of dollars in the top 10. In looking at Cardano's market capitalization on the price chart, we can see it was holding above $60 billion in market capitalization for over 100 days, or just over 3 months. So it wasn't just some quick thing. Remember that market cap is a social construct, it is a social agreement. So as long as buyers and sellers, or the market's perspective, values Cardano at $2 or $3, it'll stay there. But as soon as the consensus of the majority change their perspective, so do prices and so does market cap. And when looking at a project, the tokenomics are a consideration, the current market cap, its growth potential are a consideration, but it's not the only consideration. Now there's a lot of retail investors that might be comfortable in a project with a strong community, tons of information, years of price history, and that's awesome, but some of these projects have done over a 400x in the past 3 or 4 years, and for me, I don't think it's realistic for some of them with an already high market cap to do another 400x. Now there are exceptions to this with some projects that are actually legitimate and they do have huge potential if they succeed. Projects like XDC going after trade finance, a potentially multi-trillion-dollar market, is huge. We know even from weekly candle bodies, this bad boy did over a 400x return. And even projects like VeChain still did over a 100x, even starting from their weekly candle bodies. And not financial advice, guys, I'm a speculator in this market just like everybody else, and I'm sharing my opinion, but I want to give the reasons of why I believe that. There's a lot of scams in crypto, but there's also a lot of legitimate projects building, and I do believe they can reach multi-billion-dollar market caps, if not again. VeChain has potential. I think it's like a 14x to get back to its previous all-time high market cap. XTC has potential, still under a $1 billion market cap. And nothing's guaranteed, but if XTC gets up to 5, 10, or even $50 billion market cap, that is an insane return. And a lot of these projects that have experienced a 100x, a 400x, they have experienced 1 or 2 bullish cycles before. And that price action attracts massive amounts of attention, investors, and community members as they grow. And I'm personally very interested in Casper's long-term potential. It has never experienced a bull run. The community is small. We haven't seen price appreciation, which attracts attention, and a lot of people haven't actually really looked at this project. And it doesn't mean every single project's destiny is to do a 50 or 100x from the all-time low, but we have seen that historically. But we've seen dozens of legitimate projects do very well during a bullish cycle if they can endure the bear market, because when volume comes, it typically pushes a lot of things up. There are garbage projects that still did 30, 50x returns. Now, I believe the biggest networks and the biggest winners in the years ahead will be utility-based, but keep in mind we're still in this space, an emerging market without regulation. So regulation is the final hurdle to actually open up these floodgates, to truly allow enterprise adoption to leverage this technology, to connect it to their ERPs, their databases, etc. What's really interesting about price charts is this is just human psychology mapped, and sometimes the increase in supply or reduction in supply actually doesn't make a difference. I consider it, and we'll talk about it specifically in this video because I want to get the big picture and understand as much as possible. And even if you think this bear market lasts another year, you don't believe in all-time high prices, projects that survive when volume comes are likely going to come up to previous wicks and candle bodies, specifically on the weekly chart. And there's a variety of open gaps and sell-side imbalances on the Casper price chart, and we've shown before how a variety of projects historically have reached these levels. At 7 cents, 12 cents, etc., and even XRP, when it didn't create a new high, it just did a retracement, it came up to previous wicks during its retracement. And just super high level, these are levels that we have to get through and flip into support before we can even entertain an all-time high price. I want the bull run to get started as soon as possible. I want Bitcoin to start doing a sizable retracement, not crash back down to the low 20Ks all over again. In order to see a potential reversal to even start retracing to different levels, we need to see large candles of buy volume. And historically, just drawing a Fibonacci retracement on the weekly candle bodies swing high to the swing low of the weekly candle bodies. XLM with a circulating supply significantly larger than Casper came all the way up and closed the weekly candle bodies right up there at the 100% retracement. XRP came up to this area, and some other alts came up to the 236. And that's just about 16 cents for Casper today. For me, as long as we're down here, I'm personally accumulating, not financial advice. I see the code base being updated, I see them working on things, and I'll judge them during a bull run. And I won't get super excited about Casper until we can clearly close above this level, this double top, and that third wick back there. There's a lot of liquidity to be grabbed up here, but there's still a strong chance for rejection between that 20 to 24 cent level. If we can actually break this level, flip into support, then I can get really excited. Okay, now let's talk about Casper Network specifically and what they've done differently than a lot of projects in terms of having their own virtual machine. So Casper Network built its own virtual machine from scratch. There are benefits, or there's pros, and there's also cons to this. In simple terms, a virtual machine or a VM enables the execution of smart contracts and business logic. And many projects, but not all, leverage Ethereum's virtual machine or the EVM for simplicity. This allows them to go to market faster with exchange listings, wallet integrations, MetaMask features, all of the documentation, all of the support, all of this is already built out. So a lot of crypto projects over the years that spun up an ICO, they got their money, they said, oh yeah, we leverage the EVM, easy peasy. But there's so many scams out there that don't simply have the funding and don't want to put in the work to actually build their own virtual machine. And using the EVM isn't a bad thing. It can boost participant numbers, investors, liquidity, and potentially the perceived value of the project. Maybe the initial liquidity allowed you to actually scale and succeed. So the EVM or Ethereum virtual machine significantly reduces the required workload and cost for custody, wallet integrations, and ecosystem support and documentation because there is years of libraries already built out. So there are definite pros of using the EVM, and I'm not against it. However, the EVM has cons too, especially if you're going after the enterprise market, the largest and most untapped market in the world when it comes to blockchain. Projects without their own virtual machine that only leverage the EVM are actually constrained by the existing Ethereum virtual machine's capabilities. You don't have as much flexibility to do what your customer may be asking for their specific need. This hinders unique feature implementation, upgrades, and optimization for very specific and tailored use cases. So there are some projects out there with their own virtual machine because there are many other pros for enterprise adoption. Because they know that enterprises need flexibility, privacy, customizability, upgradability, everything for their specific use cases. So Casper chose to do this with their 40+ engineers. This costs a lot of money. There's extensive engineering work, but this offers a lot more benefits for enterprise adoption. Casper's virtual machine is based off of WASM, WASM, or WebAssembly, and this isn't forcing you to learn Solidity or a programming language that you might not be familiar with. And the big thing about WASM is this already supports the 40 plus most popular languages today that are used by Amazon, Tesla, Spotify, Google, and Microsoft. Now, some people can spin up their own virtual machine, but there's no customizability, and that's a huge missing point that a lot of projects with VMs miss out on, and they don't put in that extra work. Casper's VM was built at the ground up with multiple layers, allowing customizable account models and constant network improvement based on enterprise feedback. If a client has a specific use case and they want to update their account models to have better permissioning and features, Casper can do that. So Casper's architecture by design was built to be upgradable and modular to be truly future-proof. In this year, Casper said that about 95% of their customers are building hybrid deployments. Why is that a good thing? Because it connects directly to the public Casper network. So that means when these deployments are live, that all computation connected to the public chain requires the Casper token. So again, every single transaction connected to the public network for security, whether they hash information, whether they have an NFT version of it on the public network that's still protected and private, whether it's to access public liquidity, the Casper token is the only way to make a transaction and have computation on the network. And it's super important for enterprises to have some level of input, or at least have the option into the roadmap of these public protocols that they're leveraging. If you have your databases, your ERP, and different applications connected or running directly on these protocols, you better have some level of input if you're transacting billions of dollars. And the sad reality is a Fortune 500 company today would likely have a lot of trouble, I don't even think they'd have success, in trying to affect the roadmap for the Ethereum virtual machine. And if they did, good luck in getting that done in a timely manner. And Ethereum is planning to migrate to eWASM for their virtual machine. And I think Ethereum is here to stay. It has so much adoption, dev tools, DeFi ecosystem with total value locked, but I just think it's slow at this point. And these migrations for one of the world's biggest decentralized networks for Ethereum takes a lot of time. And Casper's network was built to be versatile and adapt. The future is unwritten, as they say, and their architecture is also capable to swap out their existing WebAssembly virtual machine for any new technologies or languages that are created over the coming years. So whether Casper wins or it doesn't, the future winning protocols will definitely have a heavy focus on flexibility, privacy, and upgradability, specifically in the enterprise market. And Casper has a lot of features that are only unique to this layer 1 network that a lot of other organizations will try to follow, but Casper actually built it from their design from the ground up. True upgradability by design. You can run 2 consensus mechanisms simultaneously, accounts that can pay for themselves, and then live debugging of smart contracts. We can see Casper is going to be at a few crypto events at different conferences in Frankfurt, Vegas, etc. And if you hold Casper today and you're interested in following up with news and different developments, one person I highly recommend you subscribe to is the X Frontier. Here's the title right here, and he did an amazing video covering the Casper virtual machine in detail. Now, one project that I hold and I believe in that is going after the enterprise market, they have a larger supply, but the utility of this network, some of the total value represented on-chain is already measured in the billions. So I'm really hoping that Hedera, with its native token HBAR, do very well over the long term. We can see their strategy in terms of smart contracts called EVM equivalence. So this is a strategic approach to ensure robust programmability for applications and ecosystems across the network, designed to empower developers by facilitating the execution of smart contracts more rapidly and cost-effectively while exposing seamless integration of Hedera's native services. So Hedera's smart and they're doing things their own way as well, with an abundance of resources available for EVM tooling, libraries, and environments already set up. They can leverage that. Leveraging the Hyperledger Besu EVM client, Hedera aims to empower developers by allowing them to capitalize on their existing Solidity expertise while benefiting from Hedera's unique strengths such as faster transactions, low and fixed fees, fair transaction ordering, immediate finality, and heightened security. So with EVM equivalence, this is a lot less work that Hedera has to focus on because there's already a plethora and an insane amount of educational programs, tools, and resources that are already available for the EVM ecosystem. And it's funny, we can see Solidity right here, just like the market. When it climbs, all the developers join the market. When it crashes, they leave. So with EVM equivalence, they can leverage that technology and all of the libraries that exist, but then also combine it with Hedera's Hashgraph, which is much more scalable, by seamlessly integrating Hedera native services into the EVM. This includes the Hedera token service, the consensus service, which is one of the largest services used by enterprise clients today. And you know, there are pros and cons to every single way, but I do think this way can work for Hedera. There's so much information that I could share in this video, but I could probably rant for 2+ hours going through different things, but let's finish up with this. So realistically, looking at Casper's tokenomics, looking at the market cap that different assets have reached in previous bullish cycles, and even for 2020, 2021, I did comparisons between that and 2017. And this doesn't guarantee anything. I know crypto is volatile, and I understand that anything can go to zero no matter how great I think it is, no matter how great the tech is, the risk is always there. So there's no guaranteed investment no matter how much I own or how much I believe in the project. It doesn't matter, the markets don't care. But looking at Casper circulating supply today and just going across the board and looking at these market cap valuations and what the price would be at each of these levels. Casper circulating supply is 11.4 billion. There are a variety of alts with circulating supplies much larger, such as Cardano, XLM, and even HBAR. Even considering the 8% inflation rate per year for the total supply. To even have a circulating supply that XLM, Cardano, and HBAR have today, that would still take 11 to 14 years. And since the Casper Labs CEO estimates that the Casper network will be at full capacity between 2027 to 2030, I don't plan to have to wait that long, if they are in fact successful. So I'm not interested in all of these numbers down here. I'm looking at it for comparison, but I'm much more interested over just the coming years. So we have the total supply, the circulating supply, and this is just one consideration. Market cap is also important. And friendly reminder that Cardano hit over $3 with a circulating supply of 32 billion. Casper's supply is only around 11.4 billion. Now, if the Casper stake bonded amount remains around 70 to 75%, there's going to be far less tokens actually available in circulation for utility and processing transactions. So when I'm looking at the total supply here of Casper tokens over the coming years, I also want to consider the stake bonded ratio. If it's around 60% or 75%, there's really not as much Casper in circulation as we think, which is needed for transactions. So scrolling through, if Casper absolutely crashed down to $100 million market cap, that would be the current price. And usually when I make this, I put in different notes of different levels of the chart and things like that. Around 60 cents is where the weekly candle bodies for Casper are. That's exactly where XLM reached last cycle. XLM, with a very large supply from its actual low, still did about a 30x return. Now with that being said, XLM was available on more exchanges, it had more users, it's been around for years. So I understand why it performed very well as a high cap. And based on today's valuation, around 60 cents would also be equivalent to HBAR's all-time high market cap at 7 billion. Now when I'm going through this, I'm not saying Casper does a 100x, I sure hope so, but we want to look at the numbers and just see, is that possible? Last cycle, alts in the top 20 reached between $10 billion to $20 billion market caps. Today, that would be 87 cents for Casper, even potentially up to $20 billion, roughly $1.75. Coin aggregator sites like CoinMarketCap say Casper's all-time high is $1.36. Now, if we look at the price chart with different exchanges where Casper actually launched, it went much higher, but these are liquidity wicks of going to $60 plus, daily candle bodies at $4. So I agree, we're just going to say $1.36 for the simplicity of this video. And for comparison, ADA also reached that level of $1.30 before crashing under 2 cents and then later going to $3 plus. And this was over a span of years since 2017. Algorand's all-time high market cap at 15 billion would be $1.30 for Casper. For me, I'm not in crypto to get a 50% return. If I'm waiting through this bear market, which is absolutely brutal, I am here for a 10x, a 50x return. As we scroll down, Casper's all-time low thus far was 2.2 cents, so a 100x from the all-time low, where we've seen other assets do maybe a 100x, if not more, is about $2.20. So right around a $26 billion market cap. Litecoin's all-time high market cap for Casper would be over $2, AVAX would be over $2.80, and those types of valuations are definitely successful. As we go lower and just look at history of different alts that actually reached crazy insane valuations, not that they stayed there, but during a bullish cycle, even to reach those levels, like Cardano did, over $60 billion in market cap for roughly 100 days is a big deal. Looking at Solana's all-time high market cap over $6 for Casper, Doge's all-time high market cap over $8, Cardano's over $8. So for anybody that has never researched Casper to say that Casper can't reach incredibly high levels or there wouldn't be an ROI, I disagree. There absolutely is, and I do hope that Casper reaches multi-billion dollars in market cap. And if I wanted to take a look at 2025, 2027 and just plug in those numbers, I could take a look at the potential future circulating supply or total supply just to get a gauge and see if there's actually an ROI and if this is worth my time. But anyways guys, thanks so much for your time. I hope you enjoyed this video and I will catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.